Welcome to the Property Buyer Podcast, where we explore the world of residential and commercial real estate to help you make better decisions about buying, selling, or investing in all types of property. Join me, Rich Harvey, CEO of propertybuyer.com.au and multi-award-winning buyer's advocate. Our podcast features expert interviews, market trends and insights, and practical tips for navigating the complex world of Australian real estate. Whether you're a home buyer, a seasoned property investor, commercial buyer, developer, or simply curious about the property market, our podcast is for you. Join us as we share our knowledge, strategies, and experience and help you achieve your property goals.
Well, hello, my name is Rich Harvey, CEO of Property Buyer, and welcome to another edition of the Property Buyer Podcast. Today, you're in for a treat. We're going to be talking about the Melbourne market, which is one of the most undervalued markets, in my view, right across Australia. And to help me unplug and talk about what's actually going on the ground in Melbourne, we have Amanda Jones, our principal economist, and Tass, our senior buyer's agent based in Melbourne. Welcome, Amanda. Welcome, Tass.
Hi, Rich. How are you? Hi, Tass.
Hi, Amanda.
Great to have you guys on. So look, today, let's get stuck into the questions. So I've got lots of sort of questions without notice to throw at you. But firstly, so our audience can get to know you guys, Amanda, how long have you been in real estate? And I guess, what do you love about being a buyer's agent?
Oh, I don't want to give away my age, but I've been in the industry for around about 20 years, which means I've seen nearly every cycle, the booms, the corrections, the panic, the euphoria. What I love about it is being a buyer's agent is really simple. I'm always on the right side of the table. That's the client side, which is very important. No vendor, no developer, no commission conflict, just finding the right asset for the right client.
Excellent. Fantastic. And Tass, what about you? How long have you been in the real estate game and what do you love about being a buyer's agent?
All right. Well, I've been in real estate all my life personally, but professionally for nearly 30 years, both on the selling and the buying side and residential and commercial. So all assets pretty much. Look, if someone said to me 30 years ago that they would like to pay me to buy real estate,
you would have jumped at it, right?
I probably would have jumped at it 30 years ago. So I don't see, I think there's not much better than being able to buy real estate and someone paying you to do that job. I just find it quite incredible.
Yeah.
I'd never thought I'd be a buyer's advocate. Certainly something that I've moved into, but it certainly wasn't planned, put it that way.
Yeah, sure. And you've had quite experience with valuations as well too, Tass. Just tell this audience about that.
That's right. So when I finished, so I was selling commercial real estate, and in 2000 I got married, and I thought, look, it's probably not a good idea to the late nights and the the weekends or whatever. So I thought I'd get into valuation. So I completed my my business degree at RMIT, and I became a valuer. I worked with Armstrong Biggs, valuers, and Urbis, and then eventually I went and worked at NAB, and I was head of valuations for the National Australia Bank. They've got an internal valuation department. It's one of the only major banks that does that. I used to get letters from APRA every year having to explain why we've got a valuation department inside a bank. So that was quite interesting. So yeah, I moved from selling commercial real estate into running an organisation within a bank, looking at valuations for non-specialised commercial properties and residential properties, and that still remains today.
Excellent, excellent. Now, being a buyer's agent, Amanda, it's a tough gig, right? I don't want to paint it's a real bed of roses for our audience, right? So there's lots of challenges. So I guess what are the key challenges, I guess, that you find in being a buyer's agent? Is it challenging to find the right property? Is it hard to get the right negotiation outcome? Just tell us a little bit about what it's like being a buyer's agent on a day-to-day basis.
On a day-to-day basis, it's not difficult, and you've always just got in mind you're the eyes and ears for your client interstate. So it's asking the right questions, having those networks to reach out to the agents, getting the right data, knowing your areas, where the infrastructure is actually happening, where the schools are. It's not difficult. The only thing that probably makes it difficult is some people in the industry on the other side aren't as transparent as what we are. So we're the eyes, the ears for our clients.
Yeah.
But I love my job. I don't think it's difficult at all, Rich. I love
That's
it.
love to hear. So yeah, great point. So we really level up the scales. That's why I started my buyers agency 25 years ago, because I could see that buyers weren't getting that independent representation. So it's really great now that buyers have got that real advantage when it comes to buying. So let's talk about the Melbourne market, guys. Currently, we're seeing quite a differential in median house prices between Melbourne and other cities. So Domain just released their latest data. And they came out and said that the Sydney median house price as of March 2026 was 1.79 million. So 1.8, let's round it up. And Melbourne was 1,080,000, so roughly 1.1. So there's a $700,000 gap between Sydney and Melbourne prices, and it's never been that far apart before. So maybe start with you, Tass. Do you think that gap is justified, or do you think it's a market anomaly waiting to be corrected?
All right, I think there's two things that at play here. Firstly, I do think it's a one in a 100-year event. It is a one in a lifetime event, and I believe it's probably, if I can use the term, Uncle Fester is the jockey, and the horse is Phar Lap, right? And I think what's happened here is you've got a really good horse, but it's not been run well, unfortunately. So once the jockey gets removed, then we replace it with a better jockey. I think the state will run a lot better. Look, moving forward, I think Sydney's always going to be, their median house prices will always be higher. I mean, I think the top 8 or 9 postcodes out of the top 10 are Sydney. And the reason for that is they've got the harbour, they have less land, if you like, on the outskirts, so there's less scarcity, more scarcity, therefore the average home price will always be higher. So I think the dynamics between Sydney and Melbourne are such where Sydney's always going to be, they'll always have a higher median house price. But I think the gap is a one in a 100-year event, and for the reasons that I've just mentioned, I think that gap will narrow, and you can see it already with both overseas immigration and also net immigration in lately, which is starting to drift back. Yeah.
Excellent. Yeah. What's your perspective, Amanda, on that gap? Why do you think it's justified? Do you think it'll close? What do you think about it?
Well, history really doesn't support it. It's just it's, you know, we've had a really long lockdown hangover here.
Mm.
We've got land tax noise, investor hesitation. But then we've got to look at the other side of things too. We've got the population growth, we've got the infrastructure, we've got the economic weight.
Mm.
That hasn't changed. Do you know what I mean? So I think if we look at Melbourne, we have to sort of look at Melbourne like Sydney, and maybe that boom that Sydney had in around about 2012. And I think we're just going through a correction at the moment. That's all. I just
Yeah.
think there's a lot of noise in the market. But
Mm.
I think Tass is right, with regards to, we do have Phar Lap, and we do have the wrong jockey. And I think
Mm.
I think very, very quickly we're going to see a lot of change here in Melbourne too. So it's time to jump on.
Interesting. Yeah. I mean, I see Melbourne as an economic powerhouse, just, using about 2 of its 8 cylinders. Like you say, it's got long COVID. It's got obviously the draconian lockdowns really smashed the state economy. But as you say, guys, the population growth is actually the population of Melbourne, for anyone listening, is actually now larger than Sydney. They moved the statistical boundaries, so Melbourne actually is the largest city in Australia.
Hmm.
So I think it will rebound quite strongly. As to when, I don't know. I do think in the next 5 years we are going to see some pretty significant growth, though. So I guess as a key takeaway from today's podcast, it is an opportunity to get into a market that's underpriced relative to other capital cities. I want to ask you guys, there's been a lot of negative press. You mentioned a couple of things about land tax and COVID, which has really sort of put the carbosh on Melbourne. But what are you guys actually seeing on the ground that maybe the newspaper headlines are missing? So maybe, I mean, Tass, you go first. Oh, sorry.
Okay. Look, I think, look, land tax. Look, I've always been a proponent of land tax. I think land tax is the fairest tax. However, it's not broad-based, right? So not everyone pays land tax. And And if you look, tenants don't pay land tax, and they make up probably 30% of the votes. So governments like looking after tenants, generally speaking. But land tax is fair if it's broad based and if it's done correctly. However, what it's doing, it's hurting, unfortunately, the investor market. In Melbourne, they changed the Retail Leases Act about 20 years ago, and you weren't able to pass on land tax. So what's happened is a lot of these taxes have crept in. And so I think that it's the boa constrictor effect, where investors are just being squeezed from every angle. And they don't see any light at the end of the tunnel. And so what's happening in the residential market, you see that with the bond authority, there's more, I think there's something like 23,000 investments that have come off the market over the last 3 years. So in that residential space, in the commercial space as well, there's an owner in Dandenong who has 4 factories, and one of those factories is just there to pay land tax. So the rent that he's getting from one of them pays the land tax. So land tax is definitely an issue in Melbourne, and you're seeing that on the ground. But I think what's more important is there doesn't seem to be any certainty about the future, and so when that happens, people make decisions that are based on today's events. So I think there needs to be a little bit more certainty around the next 5, 10, 20 years, and that's where the government's really important.
You make a good point about people hesitating when there's uncertainty, Tass. I recently was interviewed by the REA and a few other journalists, and I made a key point. I said, when there's a time of peak uncertainty, that's the time of peak opportunity. I know myself, when I've built my own portfolio, I've bought multiple properties during the GFC, during COVID, during times when the market was pulling back or getting softer, or there was just a window. And we're now in the next 6 months, as we see rates now back on their rising trajectory, we could see another 3, maybe 4 rate rises. We may have a recession. We're going to see a significant opportunity to buy good value, good quality property in prime areas, particularly Melbourne. So for me, it's like, I'm looking, going, well, where can I get another property in Melbourne? I'm a long-term investor in Melbourne myself. So I think I really believe in its fundamentals.
I'd have to
Amanda,
agree. I'd have to agree with you there, Rich. Sentiment and fundamentals are completely different things. And right now there's a real disconnect. And that's exactly why, it's the prime opportunity to actually buy in Melbourne. The buyers that we're actually seeing move into Melbourne today are the ones who understand that making, to make money, when the real story is you do it when it's bad. When the story is bad, is the good time to buy.
Well, it's a big, great opportunity, right? So you imagine, when it's the market's pumping, you got 10 or 15 people all bidding next to you, right? But when the market's bad, you might be lucky to see 1 or 2 other bidders there on the day. It might pass in, might get sold prior at a good rate. So, I just don't understand the psychology of buyers waiting to see the market completely crash. If we look at the history of the corrections over the last 50 years, the corrections are very mild and very minor. Yes, Sydney and Melbourne have just recorded a minor correction in the last cotality data. But if you look at the rebounds, they're substantial. So the argument of just waiting to pick the bottom of the market doesn't stand up in my view. What do you guys think?
Yeah, look, I think the sentiment part is not only in the property market, it's also in the share market. You see that. So people like buying shares when the shares are going up, and they like selling when the shares go down. The same is also true in the real estate market. The difference between the real estate market, though, is if you look over 1,000, so the share market doesn't have the history of the real estate market. If you look at land prices over thousands of years and you compare that with gold, they're the only 2 assets that haven't fallen. So I remember Buffett's number 1 rule, which is don't lose capital, right? So and rule number 2 is if you're not sure, go to rule number 1. So if you think about investing as not losing capital as the primary thing you need to look at, land and gold are the only things that have never lost any value over thousands of years. So if you start with that basis that, you're investing in something that's not going to lose value, right? Now, what people talk about is risk in terms of volatility. So yes, there's volatility in pricing, but that volatility is caused by a lot of different things, right? And some of those things you don't have any control over. But if you run a straight line, you're always going to get growth, right? It's the volatility in waves. It's being able to know when to buy. So if you look then at the waves, what you want to do is buy at the bottom of the wave. So That's why Melbourne is ideal. You know you're not going to lose capital in the long term, and you want to buy at the bottom of the wave so you have a really big runway. And
Mm.
all the buyers that I have, a lot of them are from New South Wales. They really understand that
Mm.
more than anyone.
That's great. Yeah, you're really right. You've got to have a longer term perspective. It's not like a poker machine trying to make a quick buck. You've got to have a long, as you say, a long runway, a long
And
trajectory.
timing, and the timing is
Yeah,
now. The
yeah.
timing is
Timing
now.
is ideal now. It's not the only thing. Now, Amanda, you've worked as a selling agent as well, prior to being a buyer's advocate. What are you seeing in the Melbourne market? What are you seeing? How are you seeing the behaviour of selling agents changing perhaps at the moment? Are you seeing any kind of changes in the way that they're marketing properties, or is there something that the buyers just don't know that they should know?
I'm seeing at the moment, I'm seeing a lot more off-market opportunities. But they always say that selling agents know where the bodies are buried. Do you know what I mean? So listen, they know which price guides are real and which are bait. Okay. There's still not transparency in the market. Um,
So you're
I
telling me
also
there's still underquoting going on,
I
you
think that
reckon?
there's probably a little bit of
Mm.
underquoting, probably more last year than what
Right.
there is this year because
Mm.
the market's taken a little bit of a hit since,
Yeah.
around about November of last year. So, but last year definitely. But
Mm.
again, Melbourne was so far behind
Yeah.
too. So
Mm.
what's real and what's not real? So sometimes the buyers actually think, okay, the agent, the real estate agent is, putting the price up. But the buyers also have to remember that our market is moving as well. Do you know what I mean? We are a moving market.
Mm.
And that's where we've got to sort of take that chatter and explain it to our clients,
Mm.
and dissect also the property that the selling agent is selling, give them all the information that they need with regards to that property. The backstory of that property is really important as well, Rich. The selling agent's not going to tell you that it was flipped, 18 months ago. We're here to actually tell that story as well.
Mm.
So on the ground at the moment, I think there's a lot of off-market opportunities, lots of off-market opportunities just because of the climate that we're in at the moment, which is great for our buyers. So I'm getting the touch points that I'm getting from real estate agents is a lot greater than what it was last year with regards to emails, texts, off-markets, private viewings. It's real, and they're asking for our help more too.
Mm.
Do you know what I mean? They've
Yeah.
got a product.
Mm.
Um, the sentiment in Melbourne or for buying in Melbourne is a little bit hesitant, and they're feeling that too. So they are looking to us
Mm.
for buyers that are ready, that are pre-approved, and they know that they can actually buy a good sound asset.
You make a good point. I mean, I'm getting lots and lots of phone calls and texts, probably triple the number that I normally get from agents. So that's a big sign for me that they're scratching for buyers.
Yeah.
Rather than just being an order taker, when the market was booming, they're now having to work really hard to get the best for their vendors. So that's
And
definitely
what great
showing.
opportunity for our clients, Rich.
Absolutely.
Like
Yeah.
we've got people picking at our heels and biting at our feet.
Mm.
There's a deal to be done at the moment.
Mm. Yeah. Tass, given that, we might see a bit of convergence between Sydney and Melbourne over the next decade, are there any particular suburbs or areas or property types that you think are going to be really good for investors to consider?
Yeah, well, I think at the moment we're seeing I think we've heard the term K-shaped economy.
Mm.
And I think that's definitely happening at the moment. So in the upper market, it's quite soft. So if you look at a suburb like Kew, about 2 years ago, that fell by 8%, and that's a top five postcode. Whereas the more affordable end is doing reasonably well. And that's why I think Melbourne will do well because it is the most affordable city. And if you think about the price demand curve
Yep.
in Economics
Yep.
101.
That's
So
right.
so when you've got affordable pricing, that
Mm.
has
Mm.
greater demand, and that's one of the reasons why Melbourne has really good immigration because it's considered very affordable. So in that affordable end, we're getting quite a bit of activity. Probably it's softened, obviously, since last year, but that K-shaped economy, I think, will probably continue a little bit. Therefore, I think in that prestige market and the upper market, that's a fantastic place to buy. I mean, I bought a property in Coonans Hill last week, which is quite a scarce pocket of Melbourne. It's the only part of Melbourne which is hilly, and it's only 8 kilometres from the city. And the price that I paid, I probably wouldn't have been able to buy that 2 years ago. So you've got a New South Wales investor who's got sort of a little bit of Coonans Hill, and a month ago I wouldn't have thought that would be possible.
Excellent. Yeah.
Reasonable yield to boot, and totally renovated and extended as well.
Okay. Very good. Amanda, you've sort of buy a fair bit in the sort of the east areas, in the southeast, like places like Frankston. Are there any areas that you would flag as having good potential for uplift over the next 5 to 10 years?
Oh, listen, I'd definitely be looking at anything from Cheltenham out to Box Hill with the new underground rail loop. The government's actually spending $32 billion on that project. $32 billion on that project.
Wow.
So that's the underground rail loop. That will probably connect to Melbourne Airport within the next 10 years. So that will make it sort of 60 kilometres of rail to the airport, which is, I think that's what we've got to sort of remember too. Governments, wherever they're putting the infrastructure, it's a good place to buy. Do you know what I mean? We have to peel the onion back, and that's what we do as buyers agents. We peel that onion back and we look at where those infrastructure projects are actually going on. And then you've got those middle ring suburbs too, 10 to 15 Ks from the CBD. I think, again, I mentioned in 2012, when Sydney sort of went, a little bit skywards, it was actually those middle ring suburbs that actually moved. So we've got to look at all of those as well around the CBD. And again, Frankston South, get into that school zone. You've got another big project out there too, $1 billion on the new hospital upgrade. It's Bayside, it's a precinct. So Melbourne has actually been, that we're going to have all these new precincts around Melbourne. South, Frankston, you've got Cheltenham. They're all being earmarked for different zoning. So they're all sorts of things that we need to be looking at. But that's what they're probably the two areas that I would look at.
Okay.
Frankston,
You mentioned, yep.
Frankston, and anywhere from Cheltenham out to Box Hill.
Okay. You mentioned school zones, and I just want to explore that with you both very briefly. School zones are obviously very important in Sydney, around certain private schools and certain catchments for really well-known public schools as well. Is it pretty similar in Melbourne, or do you think it's even more sought after in terms of the Asian community wanting their kids to go to a certain school?
Oh, totally, Rich. It's especially the public state secondary schools with immigration. When they actually coming into Victoria, they're actually going to those suburbs. Okay, the government's not building schools. Okay, so that's another thing. We need to place our clients in areas that their tenants won't be transient. And I think that's really important. So we're looking at people that want to rent these properties if they are an investor client, that have long-term, really good tenants that actually want to send their kids to the local primary school, and then that could be a feeder school for the secondary school. But we've got some brilliant private schools in Melbourne, especially, from the southeast down. You could take a pick up, Tass could talk about this too, over towards the southeast, and then you've got the south of Melbourne. It's very, very different, but there's lots of opportunities for schooling. But I do think that immigration is making it more difficult. We're seeing those zoning numbers sort of shrink a little bit too. Those schools can only house so many children. Do you know what I mean? And I think that's the point that we've sort of got to jump on.
We appreciate you tuning in to the Property Buyer podcast, and I hope that you're finding our expert interviews helpful. So that we can keep providing this information and growing our audience, we rely on word of mouth recommendations. If you found this information useful, could I please ask you to share this podcast with your friends, family and colleagues and ask them to subscribe to the Property Buyer podcast. It would be a big help and we'd be very grateful for your support. Thanks once again for sharing the links. And now let's get back to the podcast.
Exactly. Yeah. What's your view on the schooling process, Tass?
Well, there's definitely a correlation between property prices and school zones, and you can see it. I mean, my kids went to one of my daughter's still at Baldwin High, and Baldwin High is considered in the top one or two public schools in Melbourne, and there's definitely a difference in price between properties in the zone and outside the zone.
So just on that, Tass, can I jump in there? Do you reckon I reckon it's about 10%. In certain areas in Sydney, I reckon people pay almost a 10% premium to get into a particular area. Would you agree?
Yeah.
That's the sort of figure?
Yeah, absolutely. And there's two reasons for that. Firstly, their kids are going to a good school, so so there's peace of mind, but also they're saving on private school fees. Now, having said that, I lived in a property just outside the Baldwin High zone in the Riverside estate, and that wasn't in the Baldwin High zone, and that still achieved pretty good prices because people that buy there send their kids to private school. So there is an element of, look, if it's a good area, the parents still send their kids to private schools anyway. But yeah, typically, look, I don't know whether it's 10% or not. It may even be higher in some areas. But if you look at Mount Waverley, another good example.
Yeah, great. Awesome. Now, I've got another question for you both. Let's say we've got, an interstate investor from Brisbane or Sydney or Adelaide or Perth who's got $1.2 million to spend. What does Melbourne offer that same budget can't access, say, in the Sydney market? So they've got 1.2 to spend. What are they going to get for their money? Amanda, you go first and then Tass.
Oh, gosh, in Sydney, what would you get for 1.2, Rich?
You get a nice two-bedroom unit, maybe.
Yeah, that's what I was going to say. A unit with no land,
Yeah, that's
no
right.
upside to the story.
Yeah.
In Melbourne, you're going to get a house in an area that's got, an infrastructure corridor. It's got the value, it's got really good cash flow potential. And the market is sitting relatively below where the value should be. So you're buying yield, you're buying land, and you're actually buying our trade. People keep on forgetting about trade in Victoria, and it's all in one asset.
Yeah, gotcha. Tass, what's your thoughts on that budget?
Look, apart from choice, you obviously got a lot more choice, right? So that's the main thing you're getting. But the difference, I think, would be, and look, I don't know the city market today as well as I did 10 years ago. I don't really spend too much time in that market. But I think when I'm looking to buy something for an investor, I'm looking at three things, right? I'm looking at capital growth. And one of the primary things I look at is what Amanda talked about before, which is where the government's spending money, because that attracts private money. And when private money is attracted, that adds to capital growth. Yield is another thing I look at. But the third thing is when we're buying something, I've also got an eye on how do we improve and add value. And I think that's where I think Melbourne trumps Sydney, because I think for that $1.2 million, the type of property that you're going to get in Sydney, you're not going to be able to improve the property as much as maybe Melbourne. So in Melbourne, you might be able to build a dual lock. You'll be able to renovate the property, maybe go up. You'll be able to have something with more land, so you'll be able to extend it, etc. So there's more options in terms of being able to improve that property. And if you combine that with being able to time the market and buy in a cyclical low, you've got a much bigger runway, especially if you're a young couple or young, and you've got lots and lots of years ahead of you. It just seems to be a better choice for investors.
Yeah, got it. Yeah. I wanted to turn your attention to the prestige market now. So Amanda, you've bought some pretty quality properties over the years, and we seem to be seeing the prestige market diverging. Some suburbs are holding pretty strong and others are starting to soften. I think overall there's going to be a really good opportunity to get into the prestige Melbourne market right now. How do you help a client avoid picking the wrong kind of prestige suburb? What sort of guidance would you be giving to a client that's looking to really get into a prestige area?
Okay, well, first of all, again, I'm going to say the southeast. So we're looking at anything south of the Yarra. So south of the Yarra is where the money is. Okay, we've got Toorak, we've got all of those areas. We've got beaches. we've got private schools.
Mm.
Again, we've got the data behind us to look at things. Again, it can be one of those things that, as I said before, about somebody buying something, the market moves. Sometimes it's, sometimes it's the right time to buy if somebody's selling and they've made $1 or $2 million on it.
Mm.
Sometimes it's not. We've really got to, again,
Mm.
pull things to pieces.
Mm.
But schools, again, Rich,
Mm.
infrastructure, we're going to keep on going on about cafes, restaurants.
Mm.
How close is it to the CBD? How close is it to the beach? Is it a gateway to, you've got other wealthy areas in Melbourne too, like Portsea, Sorrento. We can go down the coast as well. There's prestige everywhere in Melbourne,
Mm.
the gateway to the Mornington Peninsula. So, not to make the wrong mistake, at the moment in Melbourne, it is the right time to buy
Mm.
prestige.
Right.
So the market's not moving. Again, those off markets that we're getting, a lot
Mm.
of those can be from the 3, 4, $5 million
Mm.
mark. That they're not moving. People are very hesitant. Uh, Interstate buyers or expats are a little bit more cautious, as Tass was talking about before, with regards to taxes
Mm.
and the holding costs.
Mm.
But ultimately, there's really good deals to be done too, like extremely good deals to be done with negotiation and finding the right property.
Yeah.
So it's the due diligence is the same. It doesn't matter if you're a buyer's agent, if it's a $500,000 property
Mm.
or a $20 million property. Do you know
Mm.
what I mean?
Yeah.
And our prestige market is probably a little bit different. We always hear the sound bites how great Sydney is. Do you know what I mean? Melbourne is the quiet,
Mm.
unachiever. It's generational wealth down here. So
Mm.
you get some beautiful homes.
But some of the quality, like some of the properties we all went through recently, those ones in Elwood and North Melbourne recently, were just stunning. Just the quality of the build, the quality of the finishes is just, and the architecture. I find Melbourne architecture is just next level.
Well,
So,
Sydney's got that beautiful backdrop of, the harbour. So
yeah.
that's your painting. So
You,
Melbourne we have to have some substance
yeah,
to
you got to do it internally. Yeah.
we've got to do it internally.
Nice, love it. Yeah. So Tass, I want to talk about off-market opportunities in Melbourne too for prestige. So you've obviously got some great connections with all of your networks over the years. How significant is that off-market opportunity, and how do you tap into that?
It's an unfair advantage. Look, I think buyers agents have an unfair advantage. Look, it's also a little bit of a trade-off because on the one hand, the listing agents want to be able to market the property, especially one that's got high demand. They publicize their name and they're able to get more contacts that way and then get more listings. So it's a bit of a snowball effect. And it's a way to showcase their brand. So typically agents do like the whole auction process with prestige. But the ones that may not have the properties that may not have too much, there are properties, for example, that don't work as well at auction, right? And those particular properties, there's opportunities to be able to purchase those off market. Also, there are many owners that want privacy. They need privacy, and typically, the unfair advantage that we have is that we provide recurring business to listing agents, whereas a one-off customer is one off. So the customer might come along, they buy a house, and then that's it. The agent puts them on the database, sends them out marketing material for the next 10 years. Whereas with Amanda and I, we provide recurring business to these listing agents. So we do, we don't publicize what we hear and what we know, but we do tend to get information that maybe a typical buyer doesn't get, both for price, things that are coming on the market, things that are available, etc. You don't often get things at a discount necessarily off market, but you're able to buy things that others don't get a look in.
Well, that's the thing. I mean, when you're buying a high quality prestige, the minute it goes on the market, you're going to have competition because there is that old money factor and there's going to be more competition. So you're giving people a distinct advantage getting access to that.
Yeah.
I want to turn our attention to the auction market. Like Melbourne is known as the world's auction capital, right? You guys just are amazing. It's incredible how many properties are sold and it's leading the way. But what are the most common mistakes you see buyers make when they try to do auctions on their own without representation? What are you seeing, Amanda?
Oh, great question, Rich. Three big ones. They trust the price guide.
Okay.
They don't understand vendor bids or they read the room wrong,
Mm.
or they get really emotional
Yeah,
before the auction or on the day.
yeah,
Okay, so they overpay under pressure. I guess that's
yeah,
probably it.
yeah.
So Melbourne's auctions are a theatre, and I guess that well, a quote: Melbourne auctions are a theatre. If you don't know the script,
Yeah.
you're the mark.
Love it. Love it. Yeah. Tass, what do you think happens when people don't get representation?
Well, look, firstly, it's important to understand why Melbourne is the auction capital, and that's because of the history, right? So if
Mm.
you look at the first parcel of land that was sold here, it was sold via auction. So what the royal family would grant the land to a lot of these developers, and these developers would invest money in private roads, and then they would cut up the land and auction it. So auctioning is big in Melbourne because it's our history and our culture. I run a YouTube channel where I've got a thing called Hot Auctions, and I actually try and get into the face of people that are bidding and whatever. But look, there's lots of mistakes. In addition to what Amanda said, I think the main thing is it's a little bit of a poker game, and so sometimes there are many auctions that I've won because I look a bit scary, right? And I look like I've got an endless supply of money and whatever. So there is a lot of that involved. So there's a bit of that involved. But also the other reason why we have an unfair advantage, I think, is because we know what's going on in the background. We know the agents. We know whether we should be bidding or not. There's a lot of I mean, I'm not going to disclose that they give away what the price is, but it's kind of like a bit of a nudge, nudge, wink, wink. We know what's going on, so we know when to bid strongly. We know when to do, death by a thousand cuts. We know, so all that flow. Whereas a new buyer that's coming along, they're just looking at it, thinking, yeah, we might be able to buy this, but they don't see the history and all the stuff behind the scenes.
It's really good. There's so many nuances for our audience listening on auctions. And if you haven't attended auctions, it's quite scary. Even if you attended a couple, you still don't know what the outcome's going to be. So we try to, as I say, level up the playing field. So it's knowing the cadence, knowing how fast to push an offer or when to go in with a big knockout offer, when to come in with the bidding, when to pull back, having a notable presence. And like you've said, I love when I'm doing auctions, I love the theatre of it. I love sort of being loud and proud with the bids, having a bit of a banter with the auctioneer. And it's like, because the auctioneer tries to control the process and you've got to try and level it out. So, yeah,
Well,
really good
actually,
points.
actually, just you mentioned that the auctioneer tries to control the process. So when I'm at an auction, I want to be controlling the auction,
Exactly.
and that's really one of the tricks.
It's all
Exactly.
about the confidence, isn't it, Tass?
Exactly. It's a poker game. So
Yep.
now, Amanda, you've had a couple of clients that have bought multiple properties and keep coming back to you again and again. What are you seeing or what's motivating them to buy again and again in Melbourne versus buying elsewhere?
Because the first one and the second one worked.
Yeah.
Uh, they bought when sentiment was actually soft and the asset actually performed.
Yeah.
They want more of the same.
Mm.
Pretty simple. Like Melbourne really rewards the patient investor, I guess is what I could say. Once you've sort of lived that, you don't need convincing the second time, Rich. Do you know what I
Mm.
mean?
Yeah.
You've just got to be patient. But it's normally because the asset has performed and they
Excellent.
come back.
Love it. Yep. Perfect. Proven process.
Yep.
Tass, maybe could you share maybe a client story or a purchase you did recently for an investor client? Maybe just describe the brief, what you did, the negotiation process, and what the outcome was, please.
Yeah, so this was a New South Wales investor couple. The wife was a financier, and the husband worked for the government. They already had an investment property in Brisbane. They lived in New South Wales, and sorry, they lived in New South Wales. They didn't have an investment property in Brisbane, but they wanted to choose between Brisbane and Melbourne. And I think we convinced them to purchase in Melbourne for the reasons that we've discussed on this podcast. And look, to cut a long story short, I was with them for a month. It took me a month to buy this property. I think probably had about 60 inspections. I was the underbidder on three properties, and we were just really unlucky. So three times, and on the fourth time, I found a property, as I said, in Coonansville in Pascoe Vale South. So it's a really exclusive spot in the northern suburbs with city views. And that was a property that I purchased at auction, but I had pretty good info on where to bid, how to bid, etc. And we were able to secure this property was extended, fully renovated. It was already tenanted as well.
What
The
did you
yield,
pay for it in the end?
1.37 million, and the rent's just gone up. They're paying around $3,800 a month. So it's what the brief was. They just wanted to buy something, sit on it for 15 years, and they weren't too concerned about the yield, although they're really happy with the tenants. Those tenants, I think, are going to stay long term as well, just professional tenants, and it's just turnkey, nothing to do. The what attracted me to it, apart from the block, the land, I think, is the notional land value, I reckon, is about $1 million, maybe 1.1 million. But the previous owners had spent something like $400,000 back in 2021. So and if you were to spend that today, that'd be like 800 grand. So they underpinned all the front home. There were 14 pins. So there was nothing to do, and the back section was all brand new, all open plan, beautiful home.
Excellent. Great
Which
result.
about 65% land content value as well,
Excellent.
65 to 70. So
Yeah, fantastic. Wonderful. So Amanda, same for you. Could you share a client story? Tell us the budget, the brief, and what the outcome was, please.
Yeah, I had a Sydney-based client too.
Mm.
Their budget was around about 1.7. They wanted land, they wanted yield, they wanted that growth story. I identified a house in Cheltenham. Again, that infrastructure corridor. It was, it's under rented. The property was a little bit tired, but that's exactly what they wanted. We negotiated before auction. So I think the price range was 1.4 to 1.6. Now, the reason I picked this property, I'm going to give you a little bit of into my head a little bit.
Awesome.
The agent that actually had this property up for auction was actually an out of suburb agent
Perfect.
that didn't read the suburb and didn't know how hot the suburb was. Their campaign was shocking, absolutely shocking. So therefore, it was strategic that I actually went that property. So we negotiated before auction. So we saved them the stress, the premium. It was tenanted immediately at a really good market rent. 12 months later, it was revalued and they're going to use the equity again to go again. But yeah, that's the blueprint, I guess,
Fantastic.
more or less.
That's right. Yeah, rinse and repeat, make the
Rinse
equity
and
go
repeat.
again. Yeah, love it, love it. So question for you both. If we've got an investor or a home buyer's listening to this right now, sitting on the fence about should I buy in Melbourne or not, is there any particular data point or a market signal that you might share with them that would help to move them along or that conversation along to saying, yeah, time to buy? Tass, you go first, and then Amanda.
yeah, look, it's a great question. I think in order to answer that question correctly, you need to know people's circumstances, and we don't often. We do know a little bit about it, but a lot of it is just the headspace. It's a mindset, right? Because if someone asked me why should you buy in Melbourne, I would sort of consider that to be almost a silly question, right? So my mindset is, yeah, why wouldn't you be buying in Melbourne? Look at all the data, look at all. But I sometimes have to I sometimes have to put myself in the position of the other person and think, well, I know not everyone's thinking like me, right? So I've got to think, well, but the best thing I think the best thing I can tell someone is the best thing to determine is firstly, what's their investment period, right? So if the investment period is 20, 30, 40 years, for example, and they've got a long runway, then the most important thing to do, again, coming back to Buffett, is buy low. So it's buying low, which is what provides you with the capital growth. The thing that I look at is cash on cash return, right?
Yes.
So it's the deposit, the amount you put in, the cash that you put in, and what's the return you get on that cash, which is yield plus equity growth. And if you're looking at return on cash, then buying in Melbourne just makes sense because your denominator, what you're paying for that property is low, and the return that you're likely to get because you're buying it in a cyclical low is the high. So it's just common sense, but I've sometimes got to be careful. What's common sense to me isn't always common sense, but most people typically what they want to do is they want to buy in the market that's growing, right? And so they've missed that whole first 30, 40% growth and they want to capture maybe the growth from here on. But also that presents a bigger risk, right? So now with potential interest rate rises. So if you're buying in that type of market, the risk is you're going to lose money in the short term. So
Yeah, good point. If you're enjoying this podcast, everybody, could I please ask you to like and subscribe? Just use the button down below and please share this with your friends. That would mean a lot to us if you could do that. I've just got a couple more questions and then I'll let you guys go. But if we look sort of put on your futurist hat now and think 5, 10 years, decades ahead, what's Melbourne look like as a place to live, to work, and to invest? Amanda, what's your view on the longer term prospects?
Oh my gosh. A city in transformation, I guess. A suburban rail loop reshaping the middle ring.
Mm,
Population overtaking Sydney already.
yeah.
Um, a rental market that is never soft.
Mm,
Um, I guess the investors buying today are the ones who'll be talking about the way the Sydney market was in 2012. So
yeah.
there's opportunity.
Mm, interesting. Tass, what's your view of the next decade?
Look, a lot of people think it's comical that Melbourne gets awarded the best city in the world every year, and I think there was a stint there where it was seven, and people just don't want to believe it. But I know why we get voted that, and a lot of it is because I mean, like even if you look at the climate, it's temperate. It's not too cold. It's not too hot. So we may not be the best at everything, but we're really good at a lot of things, right? And I think Melbourne will continue to be really good at in a lot of areas. But more importantly, the reason why people come here is really families and work, right? So they're the primary reasons why immigrants come here and people come here. They come here to work and they come here because it's a great place for their families to grow and to go to school. And I think Melbourne will continue being like that. That's really the attraction of Melbourne, as
Love
well
it.
as the other stuff like sports and
Yeah.
wineries and all the rest of it.
Yeah.
And
Oh,
and
quick.
like Sydney, Rich, Melbourne's an international city. Do you know what I
Sure is.
mean?
Yeah.
Like we're a big city, and we are seen on a global stage.
Absolutely. It's world class.
Yep.
My last question for you both. Amanda, what is your best piece of property or investment advice that you've ever received and you'd like to share with our audience today?
Um, Time in the market beats time in the market.
Love it. Yeah.
Um, and I guess you've just got to buy the right asset. The asset matters. And you've just got to get in, Rich. You've just got to buy,
Mm.
now is the right time to buy.
Mhm.
Prices are great. And, and again, can I just sort of say too, Melbourne is the only state that's sitting below its 2022 peak.
Mm. Which
Now,
is
that's an entry point for
that's
everybody.
unbelievable. Honestly, that is the value proposition right there. I got to tell
Yep.
you. Like
Yep.
I'm just looking at the cost of construction, and so many properties are like almost below replacement value now. So that is an economic driver. That's the one point of data I'd be pointing to people. But Tass, over to you. What's your best piece of advice that you've ever received you'd like to share?
Well, just on that too, like I've been banging on about, those 60s, 70s apartments. Now we've been buying those for the last 2, 3 for the same reason. But actually the reason we've been buying them is because we're effectively getting land value for
Yes.
those property, even like 2 years ago. So
Yeah.
look, I'm gonna give a boring response, location, location, location.
Right.
That's the truth of it. And it transcends residential and commercial. But I will say that in my own personal dealings, I've had many instances where I've had infinity returns. Now, a lot of people don't know what an infinity return is, but it's simply a return where you're putting no money down. And a lot of people still don't understand how that's done, but you can do that in real estate. You can have no money down using cross-collateralized security,
Yeah.
and you can get an infinity return, which is the rent and the equity growth, which you can't do with a lot of other assets. So, but yeah, location's always going to trump
Love it.
everything.
Love that.
And you've got
Fantastic.
Tass and I here in Melbourne as your buyer's
Absolutely.
agents. What more would you
That's
want, Rich?
that's fantastic. Well, look, thank you so much. I've been chatting with Amanda
Thanks, Rich.
Jones
Thanks,
and
Hannah.
Tass Pattis from Property Buyer. Guys, thank you so much for sharing your knowledge and wisdom today. There's been some great little nuggets. Really appreciate your time today.
Thanks
Thank
for
you.
your time too, Rich. Bye.
Thank you, everybody. Thanks again for listening to another edition of the Property Buyer Podcast. I'm Rich Harvey. We look forward to seeing you on another edition. Please like and subscribe and share with your friends. That would be wonderful. We look forward to seeing you again. Bye for now.
Thanks for being with us on another Property Buyer podcast. If you have a question you'd like to ask, please click on the SpeakPipe link and we'll answer this during the next episode. If you're looking to buy a residential or commercial property in the near future and would like to get the added advantage of having a buyer's advocate on your side, then please reach out to my team today and send us your inquiry, and we'd be delighted to help. Please visit our website at propertybuyer.com.au, where you can stay updated with all my latest market updates, weekly blogs and live suburb profiles to help you make better property decisions. We look forward to connecting with you again on the next Property Buyer podcast.